Welcome students. In the previous class, we had already discussed all the journal entries relating to realization account as done in the dissolution of partnership firm. In this class, we will be taking few more entries along with a full question on dissolution. So let's start. Entry number 1. X agreed to bear all realization expenses, and for this service X is paid rupees 2000 and the actual expenses of the firm comes to rupees 1600. Now the first point is the firm is paying 2000 rupees to Mr. X. So for the firm expenses are 2000. So they will debit 2000 rupees in realization account by the entry realization account debit to X capital account 2000. Now rupees 1600 are being paid by the firm on behalf of X. Treat it as like a drawing. So the entry will be X capital account debit to cash 1600 rupees. Actual expenses can be more or less, but the firm is paying 2000, so firm will show 2000 in realization account, right? Entry number 2. Suppose there is a stock in the balance sheet 50,000 and it is written 50% stock sold at a loss of 10% and the remaining 50% realized 15% less. That means previous 50% is realized at 10% less and the remaining at 15% less. So in realization account we will show 25,000 minus 10%, that is 22,500, plus 21,250, that is after deducting 15%. The next entry is X promised to pay off Mrs. X loan 5,000. Now Mrs. X loan is an outsider liability. It's not true that if X is a partner then Mrs. X will also be treated as a partner, right? So Mrs. X loan will be first transferred to realization account liability side, that is credit side, by the entry Mrs. X loan account debit to realization. And when Mr. X agrees to pay it, then the entry will be realization account debit to X capital account because he has agreed to pay it. So we will not pay cash, it will be in the account of X capital account. Okay. Now let us start with one full question on dissolution to see all the journal entries and their effect on the capital account and how the cash account tallies in the end. Let us examine this balance sheet. In this balance sheet, capital accounts are given, B loan is there, joint life policy reserve is there, creditor outstanding rent and bill payable is there on the liability side, and C on the asset side JLP is there. Please remember that point, if JLP and JLP reserve is given, both will be transferred to realization account. Similarly, all the assets, plant, machinery and stock etc. will be transferred to realization account, whereas cash account will be transferred in cash account and profit and loss debit balance will be transferred to partners capital account. Let's start doing this question. In this question, ABC are sharing profits in the ratio of 5:3:2. Let us read all the adjustment first. B loan was paid in cash. It means first B loan will be transferred to realization account, then we will pay it in cash on the debit side of realization account. Second point, creditors rupees 5,000 realized at 5% discount. That means creditors will be paid less 5%. Outstanding rent will be taken over by a partner C. Bill payable is paid at a discount of 10% and machinery was taken by creditor at a valuation of 15,000. Now see, creditors are 20,000 and they are taking a machine at 15,000. So the balance 5,000 will be paid at 5% discount as discussed in point number 2. Remaining plant investment realized in full. Stock realized rupees 12,000. Prepare realization account, capital account and bank account. Now let's solve this question step by step. First of all, we will prepare realization account and then capital account, and then in the end we will prepare bank account, and it will tally in the end, because if the business is closed, bank account must tally and all the partners must be paid off. Let us start doing this question. First entry will be, we will be transferring all the asset to the realization account. To joint life policy 20,000, to plant 40,000, to machine 10,000, to stock 15,000, and to investment 24,000. All the assets are transferred. Now the second step is to transfer the liabilities on the credit side. Buy B loan, that was the first item, 30,000. Buy joint life policy reserve 10,000. Buy creditors 20,000. You remember they have taken an asset of 15,000 and the remaining will be paid to them. Next point, outstanding rent was 5,000 and there was another bill payable that also was 5,000. Now all the liabilities are transferred. Similarly, the next step will be to make capital account, and after that let us see adjustment number first, where it was written B loan is paid. Now we are paying B loan, realization account debit to cash account. Now this is first adjustment, to cash. We have paid 30,000. Please remember this will also come in cash account. Next point was creditor paid at 5% discount. The remaining creditors 5,000 to cash. 5,000 minus 5%, that is 4,750. Outstanding rent was taken over by C. So this outstanding rent 5,000 will be taken over by C. So it will be transferred to C capital account 5,000. And bill payable was paid at 10% discount to cash, that is 4,500. Now this was paid, so it will come in cash account. Machine was taken over by creditors at 15,000. There will be no entry for this. I hope you remember this was an important adjustment discussed by us in one of the previous class, that if a creditor take over the asset, there is no journal entry, and if the remaining amount has to be paid, then it will be paid, as in this question 5,000 was paid, right? Plant realized full value, plant and investment. So this will come on the credit side. Buy cash, plant 40, and buy cash, investment 24,000. So this will also be added in the cash account debit side because money is coming in. Next point was stock realized 12,000. So buy cash 12,000. All these things taken together, now you can derive whether profit is coming or loss is coming. So you have to total both these sides, and if the credit side is more, that means there is a profit. If the debit side is more, that means there is a loss. Now let us see which side is more. So after totaling, we get a loss of 7,250, which divided in the ratio becomes A 3625, B 2175, and C 1450. Now this loss will be transferred to capital account debit side. As you can see, this loss comes on the debit side, and this P&L debit balance also comes on the debit side, and the capital given in the balance sheet liability side comes on the credit side. And now whatever the balancing figure remains, it will be paid to the partners by cash account by the entry A capital debit, B capital debit, C capital debit to cash. And the balancing figure can be arrived like this: credit side is more 30,000 and debit side is less. The amount comes to 21,875. Similarly for B, 20,000 is here and we get 14,825, and for C it comes to 12050. All these three entry will go in cash account credit side, and I wish and hope, and it will definitely tally in the end. On the cash account debit side, we will write all those entries from where we have received the cash, like we have received from sale of plant, investments, and there was 12,000 more, and what we have paid is 30,000 loan which was through realization account, and creditors were paid 4750 through realization account, and we have paid bill payable also 4500, and then finally the last figures of A, B and C. Now let's see if it tallies in the end or not. It tallies in the end. That means when we finish off the business, everything ends, all partners are paid off, and the cash account tallies in the end. So in this episode, what we have told you is how to do all the full entries and post them in realization account, capital account and cash account, and in the end how it tallies with the balancing figures in the capital account. Thank you very much.